Hello everyone, welcome back to Stock Market Meridian. Today is 1st July 2026 and you are watching today's post market report. Let's begin our video with today's market action. After three consecutive losing sessions, our markets finally witnessed a recovery today. Nifty 50 took support exactly near the crucial 24,000 level. However, as compared to global markets, the recovery in Indian markets remained limited, mainly because of heavy weakness in IT sector. And the main reason behind today's recovery was easing geopolitical tensions in Middle East. Ships movement through the Strait of Hormuz improved significantly, and crude oil prices slipped below $72 per barrel. Because of this, global markets remained positive, and Indian markets are also showed some bullish momentum from opening to closing. Today's top gainers were Eternal, Adani Enterprises, Nestle India, Asian Paints, and Hindustan Unilever. And top losers were HCL Tech, Tech Mahindra, TCS, Hindalco, and Tata Steel. Now let's move to geopolitical updates. As per the reports, officials from United States and Iran are expected to hold high anticipated indirect talks today in Doha, Qatar. However, this meeting has not yet been officially confirmed by Iran. Now moving to the next major updates. There is big relief for businesses as commercial LPG prices have been reduced. The price of 19 kg commercial LPG cylinder has been cut by 183 rupees 50 paisa, effective from July 1st, means from today. In Delhi, the new prices stands at 2,930 rupees per cylinder, down from 3,113 rupees per cylinder. This is the first reduction in commercial LPG prices in 2026 after multiple consecutive price hikes. Important point, this benefit is only for businesses, means domestic LPG prices remain unchanged. So this reduction is positive for sectors like food services, hospitality, and small scale manufacturing. Before moving further, a quick reminder. I upload pre-market videos every morning before market opens and also post-market videos every evening after market close. So if you don't want to miss any important market updates, make sure to stay connected with Stock Market Meridian. Also, please subscribe to the channel. Now, next update is jet fuel prices has been reduced, which is positive news for aviation companies. BPCL has cut jet fuel prices in New Delhi to 110 rupees per liter, down from 115 rupees per liter. Even after this reduction, jet fuel prices remain significantly higher than pre-war levels. Because of operating costs are still elevated, immediate airfares reduction for passengers looks unlikely. Now, another major fuel-related update is private fuel retailer Nayara Energy has reduced petrol prices by 5 rupees per liter and diesel by 3 rupees per liter. This puts pressure on state-owned OMCs like IOCL, BPCL, and HPCL. If these companies also reduce fuel prices, their marketing margins may come under pressure, which is structurally negative, especially for HPCL. According to reports, oil marketing companies are unlikely to cut fuel prices immediately. The reason is simple. They are still recovering from heavy under recoveries during the West Asia conflicts, estimated at 500 to 600 crores per day. Also, expensive crude inventory purchased earlier will take another 1 to 2 months to clear. Now, next update is the government is considering a fresh incentive scheme to boost domestic production of rare earth magnets. This puts GMDC stock in focus. Also, MOIL has reduced manganese ore prices effective from today onwards, July 1st. Prices for ferro grades are cut by 5%, while one grade has been reduced by 10%. Next important update is India has recommended anti-dumping duty on ethylene diamine imports from China, Europe, Saudi Arabia, and Taiwan. This is positive for domestic manufacturers, and especially Bajaj Amines is expected to benefit from this. Now coming to companies specific updates. Lloyd Metals reported record quarter 1 iron ore production of 6.05 million tons, where 53% year-on-year growth. Now let's see June GST collection data. India total GST collection rose 13.9% year-on-year to 1,95,000 crore rupees. This reflects strong economic activity and heavy tax collections. Now, one major stocks specific update is KPIT Technology crashed more than 17% today. The stock fell sharply after the company issued a profit warning for Q1 financial year 2027. The company said revenue dropped sharply in the last few weeks of the quarter due to sudden spending cuts by major European automotive clients like BMW and Volkswagen. BMW alone contributed around 12% of KPIT's total revenue. Since the slowdown happening late in the quarter, the company had no time to adjust cost, which means margins may contract sharply. Adding to concerns, KPIT also said Q2 revenue may remain similar to Q1, indicating continued weakness. After this, JP Morgan downgraded the stock to underweight and cut the target price to 550 rupees per share from 700 rupees per share. Now, next update is Impact Durable received approval for a massive 1084 crore investment under the State Electrical Manufacturing Policy 4.0. The company have received 36.41 acres of land and 50% capital subsidy. This investment will help expand home appliances manufacturing capacity in Andhra Pradesh. Next update is APL Apollo Tubes reported weak Q1 sales volume growth, nearly 6% down year on year. This is much lower than management's financial year 2027 growth guidance of 15 to 20% year on year. Now let's move to June auto sales data. Starting with Tata Motors, Tata Motors passenger vehicle reported strong Q1 numbers with total passenger vehicle sales growing 46% year on year. Only June month sales surged nearly 69% year on year. The biggest highlight was EV sales. Quarterly EV sales jumped 112%, while June EV volumes nearly tripled year on year to hit record highs. In commercial vehicle segment, Tata posted strong growth. Heavy trucks, light trucks, cargo vehicles, and buses all delivered healthy performance. June alone saw a 35% jump year on year, with total sales hitting 40,805 units. And electric cargo trucks and pickups achieved their highest ever market salience, making up total 10% of small commercial vehicle sales in May and June month. Next, Eicher Motors. VE commercial vehicles reported strong growth with total sales rising 29.3% year on year. Royal Enfield also delivered strong performance. Total monthly sales grew 27% year on year. Growth was mainly driven by smaller and medium segments bike up to 350cc. Next, Hero MotoCorp. Hero reported total Q1 dispatches of 16.8 lakhs units, growth nearly 23% year on year. Its EV brand Vida showed expectational growth with registration jumped nearly 185% year on year. Next, Maruti Suzuki. Maruti sold over 2 lakhs units in June, showing strong growth compared to last year. Exports also remained strong. SUV segment and utility vehicles contributed significantly to overall performance. Next, Ashok Leyland. The company reported total sales growth of 25% year on year. The strongest growth came from the medium and heavy commercial vehicles truck segment. Next, Mahindra and Mahindra. Mahindra reported outstanding overall auto sales growth of 37% year on year growth. SUV sales, tractors, three-wheelers, and exports all delivered strong performance. Next, Hyundai Motors India. Hyundai reported total monthly sales of 51,335 units, and the company faced temporary production disruption due to a fire incident at key supplier. However, production normalized from June 22nd onwards. Next, Escorts Kubota. Tractor sales grew 19.1% year on year, while construction equipment sales surged nearly 49.1% year on year. Now let's see Coal India's business update. Coal India's total production stood at 57.4 million tons, slightly lower compared to last year, and its subsidiary company BCCL's coking coal production fell 12.5% year on year. However, coal offtake remained stable. That's all for today's post-market report. If you found this video useful, don't forget to like, share, and subscribe to Stock Market Meridian. I will see you in tomorrow's morning pre-market video. Until then, signing off. Bye bye. Jai Hind.